Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Tuesday, September 7th, 2010. This morning we're talking about Euro banking concerns. Now, overnight there was some news out reported. I don't even know if it was necessarily news, but for some reason the concerns about the Euro debt crisis have picked up. We're starting to see some of the bond spreads over in Europe, particularly Ireland and Greece, move a little bit higher. And now there's increased talk that that this has come back into focus, and that we're going to have continued problems with the Euro debt crisis going forward. Well, I'm not really sure exactly what was reported or why this has happened, but it seems to me that today's sort of a day where there's not a ton of news out there. So when in doubt, sort of fill it with something that can make the markets a little bit fearful. So I don't know what's changed from last week, but as far as I know, these bond auctions have been going off without a hitch. And until that stops happening, I'm going to say that while these banks aren't healthy and that there's still problems, that this really isn't any sort of new news. But what is news in the Eurozone? Let's take a quick peek here. You see that the euro is lower across the board, pretty much against every currency. German factory orders came in weaker than expected. Okay, now that's showing signs that demand's starting to decrease a little bit. All right, they were expecting a gain of 0.5%, and they actually weakened 2.2%. So people are starting to talk about the double dip recessions, what's going on, but we're going to have to see how that plays out going forward. I just want to take a look at the Aussie. The Aussie was lower this morning, got below 91 cents versus dollar, and there's some risk aversion obviously going on in the market, but overnight the RBA left rates unchanged at 4.5%. Now new Prime Minister Gilliard looks like she's finally been established here as the new PM. She's got her government together. She's won over support of some of the independents, and it looks like they're going to go forward with the old mining tax that some were thinking could affect the way that industry works in Australia, which could potentially add to an economic slowdown. Now, they also had construction spending, which came in less than expected for the third month in a row. So they're just sort of doing a little pause here in Australia, and that's probably not a bad thing. They've got a little bit of a housing bubble going on right now. The economy there still appears to be pretty strong, so a little bit of a slowdown may not be seen as that bad of a thing. I just want to take a quick look here. Let's look at dollar versus the loonie. Let's go here. Where are we? 4-hour chart. I just want to show you. I've got some Fibonacci retracement numbers set up here. Looks like we've got a little bit of support here at 103.25. We're going to see. I think we're going to trade in a slight range here, but tomorrow we've got the Bank of Canada's interest rate decision, and right now the market appears to be pretty split on what they're going to do. Namely, are they going to raise or are they going to maintain rates? I think right now there's a slight expectation that we are going to see a raise. However, as global economic slowdown talks heat up, it may be hard to do for them to do that in this climate. So we're going to have to see what happens tomorrow. But right now, the Canadian economy has rebounded a little bit better than the U.S. economy. Employment figures are back down below, recession levels of 2008. So they appear to be hanging in there all right. Just want to take a quick peek at the pound. Pound is also lower. We don't need these Feb levels for the pound, do we? Let me see here. What did I want to look at with the pound? Let's just look at this on the 5-minute chart. You can just see that the pound's a little bit lower. Settled in just above 153 here. Now, they're going to be coming out with their rate policy meeting on Thursday. They're not expected to make any changes. But what's happening over in the UK is that there's this talk about the credibility of the Bank of England. They have to maintain these inflation targets and stay below. They've been above it for some time now, and they're walking that tightrope balance between maintaining economic growth and attempting to rein in inflation. So we're going to have to see what they say at that meeting. But they just had retail sales figures come in, which came in slightly higher than expected. So that's a good thing. Much of that's being attributed to the old back to school demand. So we'll take a look at that. And then lastly, just want to look at dollar versus yen. We've got more yen strength. They had their policy meeting last night. We can look at it. Wow, look at that trend on the daily chart. Just nice downtrend settling right in above 83.5, which is a new 15-year high for yen versus dollar. Okay, they had their policy meeting last night. They didn't make any changes to anything. So, the only thing that they've done as of late was they had that emergency meeting on August 30th where they injected a little bit more liquidity, but that was largely seen as a token move. Now, I think they're starting to realize in Japan that there's going to be very little they can do to, actually stem yen strength here. They are looking for weaker yen, but they may not be able to get it. Okay, there's going to likely be U.S. opposition to any intervention that they may try, and now there's also talk that perhaps quantitative easing here in the U.S. is going to pick up, and if that happens, that's most certainly going to cause further yen strength. So, what happens and how far this goes really depends on the global economic situation and whether or not we see further risk in the markets going forward. So as the problems in the world economy reach center stage, it's becoming more apparent that fear around the globe is likely to persist for some time. Now, there are some good economic stories out there. We talk about Australia, Canada's doing better, and also there's a whole group of countries and currencies that we rarely talk about, but the emerging markets, which are doing pretty well. So we know about the problems with the big boy economies, namely Europe and the U.S. and Japan, but as long as China's still out there and they're sort of spreading around their U.S. dollars, trying to divest a little bit, money's going to find its way to places where it needs to go. So even these pig nations in Europe that people are talking about as having problems maintaining their debt and doing that, China seems to be picking up a lot of that slack. But what we're going to have to see is that we are going to have to get some sort of global balance back into world economies, as it's been fairly one-sided for now. I mean, the U.S. can no longer be the buyer of last resort for all the world's goods and services. We're tapped out. U.S. consumers tapped out. Governments tapped out, and some of these emerging economies are going to have to start to pick up, the pace with some of their domestic demand. And one place where this really should happen is in Japan. Now, especially with a stronger Japanese yen, that should really encourage some sort of buying. I don't know if it's going to happen, but some of these economies around the globe are really going to have to take a look at policy and make the changes necessary to get this ship moving again. And one place where that really needs to occur is also here in the U.S. There's just news out there that President Obama wants to come out with a new financial band-aid, that they're going to do a temporary tax relief for businesses that spend money and hire people. Well, that's great, but what happens when that expires? Just like all these other short-term deals, all right, it's good for a little while, then it expires and it does really nothing. I mean, if you want to have some policy in place where we can really encourage businesses to put people back to work, offer a much longer-term tax break. Okay, get some of these overseas businesses to come back, get them to start hiring their workers. I mean, if we can't get business from overseas to come back, we're not making any money off them anyway right now as it is. So what's the difference if we tax them or not? Why not have them come back, employ people, start to produce goods and services, improve the trade deficit, and become more balanced global economy? Well, unfortunately, I don't know that we have that sort of forward thinking in Washington D.C. these days, but that could all change very soon. So anyway, that's what I'm looking at today. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.